Over in Hong Kong side, we have David Chang, founding partner of MindWorks Capital. Thank you so much for being here on the panel. And over in Hong Kong as well, we have Queenie Wong, Vice President of C Ventures. And right now, over in Singapore side, we just saw them not too long ago. I'd like to welcome on stage Mr. Edward Tay, CEO of Sistema Asia Capital. Please give him a round of applause as he comes on stage. Thank you very much, ladies and gentlemen, for your warm welcome. And also as well, Kuo-Yi Lim, co-founder and managing partner of Monks Hills Ventures. Can we give him a round of applause too? Thank you so much for being back here. And of course, welcome back again. Our favorite moderator is none other than Professor David de Cremer. You have 45 minutes. Have a great session.
Thank you so much, and welcome here in Singapore and in Hong Kong for our final panel discussion. And this one is an important one. Today, I heard someone say it's important to grow the potential. Well, this session, we have the people who make the potential grow. And hopefully, as the title of this session also says, into unicorns. So, welcome everybody, Kuo-Yi, Edward, David and Queenie in Hong Kong. Thank you again already for your participation. Of course, you have to do something, and I have a few questions. Of course, we want to see what is it that VCs do? What are your experiences? What does the future look like? In the earlier session on Founder to Founder, I already mentioned that the number of unicorns has increased in the last 8 years dramatically, which is a good thing. We see more and more companies emerging with a market share of more than $1 billion. Even this year, it's going even quicker. In the first 6 months, we've raised more than $300 billion US dollars alone, which is more than the whole of 2020. So people are predicting that this momentum is here and it will continue, they say. So what I would like to hear from you is, how do you look at the current investment scene? Is it a very healthy one that where growth, quoting the financial crisis, or before the financial crisis, growth seems to be unlimited? Or do you see some clouds on the horizon appearing? So is it a good time to be a VC today? And may I start, Kuo-Yi, with what is your view on this?
Yeah, it is indeed an interesting time right now. I think and it is a great time to be an investor, whether you're in the public markets or as a private investor like ourselves. We're living in a very contradictory time, a very kind of paradoxical time as well. Clearly, a lot of the adaptation of technology is driving businesses, digitalization, consumption online in the digital realms. But at the same time, we have an environment where the cost of capital is so low. That's driving a lot of the investments, the velocity of investments, and the valuation at which the investments are done at. So I think there's a lot of these sort of mixed situations that we have to grapple with as investors, right? I think the truth is probably somewhere in between in terms of whether things are overvalued or undervalued. There's truly an underlying current of digitalization that I think is driving real businesses being formed and becoming significant. But at the same time, I think there's a lot of cheap capital at play as well.
Yes. So, like you said, it's trying about finding the balance. The opportunities are there, but there's also some ambiguities as well, as you would. Edward, what is your view on this?
Yeah, so just like to share a bit of background where we came from. So we are actually a European VC. We're a Forbes 2000 company. And I'm in Asia itself, we have nurtured and we have groomed unicorns. So I would just like to share that for all the startup founders over there, it's actually in Asia itself, it's not just one single market itself. If you look at North Asia, you look at South Asia, you look at Southeast Asia, these are pretty distinct markets. So to answer David's questions, I think the future really depends on what these three markets really looks at. For example, in the North Asia itself, aging population is definitely an area. So anything on healthcare, anything on predictive, anything that's on consumer care would definitely be on the top of VCs who are investing in those sectors itself. Like in places like in India, where we are coming from, we realize that anything that is consumer, basically, would really do the trick. And in Southeast Asia, where there's a lot more fragmented, multi-religion, multicultural, we find that anything that is perhaps more fintech, something that cut across all these countries, maybe something to be watching out for. So ultimately, it depends on the segment that the startup founders is going in, and also the VCs who are investing in that territories, in that domain as well.
Yes, okay. I hear a very typical tone, of course, of an investor. You're always very careful when it comes down to money, so you don't want to be too optimistic. But what I hear you say is that it really depends also on the economic trends in the region or the type of innovation that's really being pursued, where you see opportunities. That's an important one. Okay, David and Queenie, what is your opinion about this? What do you think about the current investment opportunities, the health of the investment market? Where do you see the opportunities? David?
First of all, thanks for having me. To give everyone a quick background, I'm the founder of MindWorks. So we could be a little bit different than other panelists. I could be wrong, but we are a pan-Asia focused firm. About 70% of our allocation is in China, Hong Kong, and 30% in Southeast Asia, and we focus in Series A to C. So to answer your question, one of the few positive effects of COVID, it's obviously become more interconnected and globalization. And we believe this trend will continue to rise. And leveraging on what Neil Zhang said earlier, the increase in the supply chain and leveraging on China's supply chain, we see the outbound of tech and innovation, of course, e-commerce, for example, it's continuing to accelerate. Thus, we see more unicorns will be emerging. So that's why you see companies like Shinin that's emerging now, doing very, very well. And there's a lot of these Shinin similar companies or C2M companies that's popping up that we're seeing across the spectrum globally, leveraging on Asia's infrastructure.
Okay. Queenie, what is your view?
Yeah, sure. And before sharing my view, maybe I should also talk a bit more about C Ventures in our background. But basically, we are a VC/growth investment fund headquartered here in Hong Kong, and it's a fund founded by Mr. Adrian Chang. And our focus has been really investing globally in the consumer technology and lifestyle sector. And obviously, David, you talk about like there are more and more unicorns that we are seeing, especially in recent years. And I mean, in our opinion, that's a natural outcome as long as there is continuous disruptions in traditional industries, and we are seeing these new unicorns gaining market share every day. But I will also argue that this is also a reflection of supply and demand in the VC market these days, right? As in the past 1 to 2 years, we are definitely seeing more and more money pouring into the VC market, supporting the growth of startups. We are seeing, like VC funds raising billions of dollars, investing into technology sector. For instance, we are seeing traditional private equity also developing their growth investment arm, and now we are seeing new instruments in the market, such as SPAC in the market. There are now over 400 SPAC in the market. They're waiting to de-SPAC in the next 12 to 24 months. And these all serve as the demand for high quality companies. And I would say that definitely have drive up the valuation we're seeing in the market lately. And as an investor, obviously, we believe there's still a lot of good companies out there that we could invest. But I guess it also presents sort of a challenge to us as to how to avoid FOMO, which is fear of missing out, how to stay disciplined to your investment thesis.
Okay. I think you raise an important question that I'll come back to later as well. But it seems like you're also introducing the question of, we see a lot of unicorns emerging, but how many big companies do we really need? I mean, the growth of startups is important, but how much is enough, to say so? One thing that I do hear that you're also saying in common is there is a momentum there. There is some optimism as well. There's many opportunities, especially with technology innovation happening. David referred to COVID-19. We have a global trend. Investors are everywhere. So could I also then think of that if there's such a momentum, do you see that there's an increase among competitors among investors? Are there more competitors now emerging on the market? And do you feel that that's a good thing, or is it a disruptive thing in a negative way or in a positive way? Queenie, could I start with you?
Absolutely. I mean, first of all, I definitely think that there is more competition here among investors. As I mentioned just now, we're seeing a lot more money pouring into the market from all different kind of investor. And I think here in the market, perhaps we can see there are three kinds of investors, right? There's first type of investor with very strong brand name. So basically for the companies, having them on the cap table is already a big plus. And obviously they are having strong access to the best deals in the market. There is the second type of investor, which I would argue more like a high velocity investors. They invest basically for speed. They have very low maintenance costs to companies. They basically just put money at a very fast pace. And we are seeing this type of investor participating in the market. And then there is the third type of investors, which is, I guess, more like us as in C Ventures. More strategic focus, we believe we can create value for the company, not just bringing money and brand name on the table, but we actually could create synergies. And then also, I would say more like special industry, specialty focused investors. And I would say this is the third type of investors that are growing, that are investing more aggressively in the market. And whether it's a good thing or not, I mean, going back, as long as there is a stronger demand for investing, obviously it drives up the price of investment that we can see in the market. But at the same time, I think it also goes back to sort of as an investor, right? What are the sort of companies that you want to partner with, and what is your competitive edge as you are looking for good quality business? I think ultimately, going back to the investor, you gotta ask us, like we're gonna ask ourselves, what are the sort of value that we create for the companies? I think that remains to be the most important questions.
David, what's your take on this? More competitors or also more risks?
Well, yeah, so quickly, you have to look at the current market condition. So low interest and continued printing of money supply. So all investors globally are taking on more risks to look for that yield, look for return. That's why you see all-time high in NASDAQ. What Queenie said they're moving down to SPACs. So that's why you see 400 SPACs. And late stage companies are hitting sky-high valuation. I think the last point is coming down to venture capital. Are they coming down? Yes, they're kind of forced into coming down into a venture capital space on private equity. But I think from among us, as all investors here, we know that we don't see them as truly as a competitor because visibility in the deal flows for what we do is quite low. A lot of people do not have, or simple family offices will not have access to a lot of deals and companies that we look at. So therefore, there is money coming down, but I don't think our competitors.
Point. Edward, so how do you look at this in terms of competition? Do you see an increase as well? And do you see, is there a difference in ecosystems between, for example, Singapore and Hong Kong?
Yeah, I more or less I echo what Taze and Queenie are saying. I think ultimately Singapore, Hong Kong is pretty much almost the same. I would like to compare to perhaps like Korea and Japan, Singapore, Hong Kong, and then also emerging markets like India. So these are three very distinct places itself where we are seeing very different. For example, where we started over in India about 10 years ago, we don't have to compete with Silver Lakes and Google's and Facebook's investments. Right now, they're all over in India itself. So in that sense, right, for the South Asia market itself, that has got a lot more competitive, especially even for big VCs. But in the North Asia, interestingly, I think it's including Hong Kong's and also China itself, we are seeing a lot more common issues that's coming up. For example, aging populations, and educations, online agtechs, medtechs. These are some of the common challenges that entrepreneurs and innovators are all trying to solve the problems. And interestingly, because given that by themselves, they're a huge market already, comprising about 1.6 to 1.7 billion people. So actually, that also attract a lot of VCs outside of that traditional domains to come on board. So that's a very interesting play. Southeast Asia is also very different. I think the earlier presenters have actually presented from 2015 to 2019, from an average about 400 to about 700 transactions in Singapore, has definitely shown that the entire market has actually grown up. However, the issue over here is, I think in Southeast Asia by 2030 is target to be the fourth largest economic region itself. And so that actually attract a lot of funds that was not traditionally in Southeast Asia coming in, from North Asia, from US especially, and also from the European side, where we are seeing very little use.
Okay. So, Kuo-Yi, I suppose, you've seen the same trends, but also I think there's a lot of non-traditional investors actually moving into this competitive mass, to say so. What's your view on this? How do you see that evolve, actually?
Yeah, so our perspective is obviously unique because slightly different context. We are an early stage venture capital fund focused on Southeast Asia. And Southeast Asia is characterized by a couple of things. One is, obviously a diverse, complicated region. Second, the ecosystem is still relatively nascent. And so we've always been asked, where are the follow-on capital? If you invest in Series A, where are the Series B, C, D, and where are the exits? So back to the question about the entree of these non-traditional investors, the pension funds, the sovereign funds, the hedge funds of the world into the early stage tech. I think, from the Southeast Asia context, it's actually very welcomed. That provides some level of capital supply and certainty for a lot of the companies that we invested in the Series A stage. We have, as a fund among Seal Ventures, LPs, investors who are pension funds, funds of funds, endowments, sovereign funds themselves, and the appetite to participate directly into the companies is very, very high, and we welcome that because that truly is one of the strengths that we have as a family of investors bringing the capital to the market. So I would say that there's quite, a lot of positives in the context of Southeast Asia. The complexity serves, in our favor. Ultimately, you still need to be on the ground, familiar, and and be close enough to what's going on the ground to be able to suss things out, to David's point, right, to see the deal flow, and to make informed judgment. As easy as it is right now to make a lot of decisions over Zoom, there's still a lot of things to be said about what you may not uncover over Zoom, particularly when you're so far away and when you're so early in the stage of the company. So I think there's still a lot of advantage for a GP like ourselves who are very local. The last thing I would say, though, is this. As fast as capital flow into the region, we have seen this before, David, in your career as an academic, in the academia, capital will leave very quickly as well. Yeah. When that ends. I think India saw that several years ago when money came in and then money left quite quickly as well. So the cautionary tale, I think, for founders is be grounded. Look at setting valuations that you think you can keep up. Because as easy as money come in, at some point they may leave very quickly as well when interest rate goes up, when things get tighter. So I think there's some cautionary tale there as well for everybody.
I like your last point. It really resonates well what we heard earlier in the founder-to-founder panel, where basically they also said you collect the money where you are. So the localization. And that's an interesting thing because I want to pull it back to, David already mentioned COVID-19 as well, and the globalization, the trends we can see, investors worldwide, we see the increase of competition, but still, Kuo-Yi, you're emphasizing, look, we have a lot of complexities. Despite all this optimism, despite all these opportunities, in order to deal effectively with these complexities, stay firm on your ground as well. Know what you're doing. And that seems to be that, as an investor, that's what you're looking for as well. So the ecosystem will play a big role of how that specific market you're interested in or that specific company that you're interested in and probably also the government in itself. So what has been your experience with this increase in opportunities? At the same time, we see governments are also, they're scrutinizing companies more, because still a lot of companies, I mean, if you look at the last unicorns of the last year, still many of them are bleeding. Their finances are not that okay yet. So how does the ecosystem and government impact on your investment decisions today? How do you look at that, and are there any developments to be expected in the future? Can I ask you again, Kuo-Yi?
Yeah, I spent 3 years working in the Singapore government, investing, on their behalf, a particular fund. So I was the CEO of Infocom Investments, which was a predecessor to SG Innovate that Xian Hui is now a part of. I would say that, increasingly, government is going to play an outsized role in how tech is going to evolve. In Southeast Asia, governments were very supportive, right? The digital economies create jobs, create opportunities. There's a lot of drive to sort of grow the industry. But increasingly now, I think governments are trying to figure out how to work with big tech, right? When technology companies become a significant chunk of the economy, become quite, significant and potentially quite influential and consequential, governments are going to try to figure out how to work with them and how they fit within the economy, and regulations and policies are going to be put in place to handle that. We're seeing that happening in the US. We're seeing that happening in China in a different way. I wouldn't be surprised if it begins to happen as well across the region here.
Okay. Edward, what's your take on this, with the government involvement and local, global, basically?
Yeah, so I think essentially the question is government a bane or a boon, right? From our perspective, we actually see two things. So one is definitely the governments are trying to support the innovations. Somewhat, for example, like Singapore, they're a little bit more nurturing. Somewhat in Hong Kong, so they believe a little bit more about market competition. It's fine, but in generally, most Asian governments are pretty supportive, because tech companies and startups do generate jobs. Tech company and startup do draw in foreign capitals, which is heavily needed for developments. So all these are fundamentals and KPIs that the local governments are actually driving, and it's actually aligned with them. But where we hope to see perhaps more governments' efforts is actually pushing for global initiatives. Some of the global developments, for example, the RCE piece, I think some of the local governments has been very supportive, some less not, right? And there are, for example, like Singapore governments, they have inked at least about 25 or 27 free trade agreements with everybody in the world. We hope that many of the markets in Asia can actually do likewise as well, because it will really benefit VCs like us, because we want to invest in a place where there can be free flows of products, of money, and of course of people. But that's going to be very, very difficult, because right now we are living in this very polarizing world itself. There has been bifurcations of the US and the China major power rivalries. And small places, small companies, small country like us, all being caught in between. It's very difficult for us to actually do anything beyond that itself. So in that sense, the innovators and VCs like us rely heavily on the local governments or the federal governments to actually help to lead the way forward.
Yeah, thank you. May I ask, in Hong Kong, David, how do you look at this situation in terms of government? Because of course, I mean, we know in the last few years, there's been changes in government, in the influences. We just heard the US, China tech war is basically also happening. It influences a lot. How do you see this happening, the influence of that environment on your investment strategies?
Yeah, so there's two sides to this, right? There's number one is the investment side, and there is the operational side from like portfolio companies' perspective, right? So on the investment side, fundamentally, innovation is always driven by private markets. The government does not drive innovation. It's more efficient for private markets to drive it. So knowing that, the Hong Kong government is always like what Eric from Klook said, they have a market approach to this. So for us, as a fund headquartered in Hong Kong, we'll work with government on the investment side with a market approach. Then on the operational side, right, as you mentioned, there has been a lot of regulations that's really coming into play, especially in our, 70% of our portfolio is based and operational in China. Some of our company actually came from Hong Kong, started in Hong Kong and went into China. And that knowledge is what comes down to as a VC will bring. As a VC, our job is to cover founders' blind spots. That's what we do. And if we knew that a company or a founder is heading to China, we'll start laying out the legal framework for them and getting them the right legal opinions for them to abide and understand the regulations that will come or is happening in China. So that's how we approach from our perspective. And as these companies grow, if you're operating onshore in China, a GR team, it's an absolute necessity that will also help streamline and build out. GR just government relations, right? Most companies has a PR team, but especially operating in China, you will have a GR and a PR team.
So operation, two sides, operation and the investment and the innovation, which is independent of government itself, yeah. So Queenie...
There's different set of policies, right? Yeah, so there's different set of policies, right? Depends on the segment and the investment side. Yeah. If you're in logistics, if you're in O2O, the recent regulations will be something to be aware of.
That's a great point, David. I think, sorry to cut you off before Queenie jumps in. And I think the ability to build that government relationship management muscle is a very new thing for both investors as well as for companies. Yeah. So I think that's one of the key things that will be interesting to see how it evolves. Yep.
Yeah. Okay. I think that's a great question. Queenie, you already have some thoughts on that?
Yeah, I mean, first of all, I tend to agree with every panelist here in terms of, like innovation, right? I think overall speaking, regardless of, we're talking about like across different regions, like even including in China, I think the government has always been very supportive on innovation, especially in technology, etc. And obviously, I think what about the relationship with the government to understand the climate in different regions, right? Obviously, I think it's important. And to be honest, I think this is also what makes having a regional investor important for some of the companies. So for instance, in my situations, I look into consumer opportunities, especially for example, like U.S. companies, and we tend to look into those with a potential Chinese angle, i.e. the company having the potential to get into the Chinese market. But most of these U.S. companies, they don't understand the Chinese market, especially on how would the government play a role, what would be the policy towards different sort of sectors, how to deal with the competitions in the market. And I think that's where investors like us could be value adding, because it's much harder for them to navigate this market. And given that we have presence here, we have operations in this part of the world, it's often on us to really provide that sort of advice to these companies. So, I mean, obviously, there are a lot of new changes that we are seeing in different regions lately on the policy changes, etc. And it's something that we are all navigating as of this moment. But I also don't think that we have to panic over the very recent changes. And I would say, again, I think ultimate goal, I would say globally speaking, for almost every government, they are supportive of innovation. And that's very important in today's world.
Yeah, okay. Yeah, I think we can all agree on that, and listening to your responses, yes, governments, I mean, sometimes when the question is asked, it sounds negative, but actually governments provide a lot of support as well and provide the structure, even the infrastructure, to promote innovation, which actually benefits us all, and making these decisions. But of course, that's the environment. One thing, and David, you've referred to it already a few times, is really how you guys make these decisions. Of course, you have the government, you have global influences, you have crisis situations like COVID-19. But at the end of the day, you do make a decision, and I noticed this also during the founder-to-founder debate, that the founders were actually looking for VCs who could almost be their mentor. Like David said, we identified the blind spots for them as well. What I really found interesting is this also how you look at it, and is this how you make decisions? Do you place yourself sometimes in the perspective of being a mentor for the companies that you want to invest in? And is this a framework you use to decide to invest? Because of course, if that's the case, it takes a lot of time, and you're being introduced to so many companies, you get so much information. So to what extent does that role of potential mentorship and maybe getting to know their personality, the values of their projects, their sustainable values, how important is that? How do you get that information? How do you make these decisions? David, if I can go back to you, because you mentioned this already for the first time.
Yeah, sure. I wouldn't call it a mentorship. I think it's more like a partnership. And there's always a joke, in our industry saying that, hey, investing in the company is worse than a divorce and a marriage, because divorce is easy, getting out of the investment is hard. And that's why as a VC, you really have to understand your strength and what you have to bring onto the table, right? We will sometimes reject investments if we know that there's really not much synergy to the rest of our portfolio or to the team, even though it's a good company and it's a good founder, right? So for us, for example, we are a pan-Asia fund. We like to focus on cross-border and transcendence of tech, etc. We know that a company is only strictly focused on one particular area, niche market within a certain country. That could be something that we're not interested because it doesn't fit our pan-Asia view or a pan-Asia philosophy. So, and that's how we look at it, that's how we make decisions overall, because we always want synergies between our founders, and they will create a bigger ecosystem. At the end of the day, as a VC, our job is we are super connectors. That's what we do. Yeah.
So you find these synergies obviously important. Also, like you said, to identify the blind spots they may have, because how do you, if I just may ask, you talked about these blind spots. How do you identify them before you start talking to these companies? Because, like I said, you meet a lot of companies, you meet a lot of people. So when does this assessment take place in your decision making?
That's a good question. So the blind spot is actually a result of the synergy. So let's say for example, how we got into cross-border is we were a very big logistics investor. Then we went up the chain from final mile to first mile to cross-border. Then as we start looking at the companies, we see how our other portfolio companies can provide a service, additional service to these investee company that we're looking at. And from those results, from just talking from founders to founder and sharing notes, we understand that there's some possibility that whatever they want to build out might not work based on our knowledge in logistics vertical and where they're focused on supply chain or e-commerce, right? So we bridge that gap. We're trying to arbitrage the knowledge between two founders and then understand where the gaps are. That's what we do as VCs. Yeah. At least
thank you.
That's what I think.
Okay. Queenie, what's your take on it? How do you make these decisions?
Yeah, no, I mean, I absolutely agree with David here talking about us being a partner instead of a mentor to our portfolio companies. Because first of all, it's important to put, I would say, us on the same level playing field instead of like, okay, us trying to, giving all the advice. I think it's sort of more like first of all, I think it's more a mutual process. And like the way that we think about this is, right, as we talk about in the founder-to-founder sessions, for many of the good companies, honestly, there is very easy access to capital these days. So if the only value added you have as an investor is money, basically you couldn't really get access to deals. And so I think first of all, the value add definitely comes from the potential partnership and the synergies that you could create. And I think that's what most of the founders value these days. And the second thing about how to maintain the relationship and talking about blind spot is because since we're investing at a very early stage in companies that are more like engaging in a dynamic process, more like a moving goalpost instead of a static companies. That means the company is still growing and the founder is also still continue to find the right way to scale up the business over the time. And it is important for us to leverage what we are seeing in the market as an investor. And obviously we could get advice, but more importantly, it is important for us to maintain an open communications with the founder. You wouldn't want to invest into a founder in which they could only deliver good news to you, but never bad news. Because they only treat you as an investor and they don't want to tell you about the potential obstacles they're facing. You would want them to tell you the potential challenges that they are facing at the right time so that you could offer your insights to them. Because I think in our experience, right, we have portfolio companies that, well, in every update call, they're telling us, oh, the great news about the growth, et cetera, until very late, they start to tell us there's something that goes wrong. And as an investor, you would want to know that earlier than later. And as somebody that is a partner to your founder, you also want to help them at the earliest time that you can. And so that's why I think, after all, for us, investing as a VC investor, it's not just about finance. It's more a relationship and people business. And building the right relationship with the founders, to us, is extremely important.
So, I mean, you're clearly stating here that as an investor, you really have to be willing to be actively engaged and involved in it in growing the company that you're investing in, basically. So, may I ask, Edward, what's your take on this? How does the look on partnership with the company influence your decisions, and what do you expect from that?
Yeah, I echo what Whitney have said. So I think the relationship between the VCs and the founders is very much like a marriage. Yeah. Once you're into this, you got to make it work, right? But there are fundamental challenges. So I guess for us, we have big funds to deploy. Our problems is really how do we scale up all that companies very quickly. Yeah. So the approach that we have undertaken was really partnerships. And this partnership is undertaken at the incubator and accelerator level itself, right? Just in Asia itself, Sistema is already working with more than 500 incubators and accelerators itself. And many of these are actually our core partners, right? It's one of the very best one, definitely, will be Huawei Sparks itself, because they have like 1.8 million the developers who are already inside here, developing the whole ecosystem itself, and they have more than 20,000 corporate partners already. So any of our potential companies or the companies that we have investors, we are likely to be partnering with them, right? Because many of the businesses that they are going after is very much where we are also going after, which is basically at the SaaS levels, which are the MagTechs, which are the FinTechs. So there are many common areas. So across the board, across in Asia itself, there are many incubators who are focused in different areas, many accelerators who are also very focused and very localized. Some of them just do just one country in country. That's great, because I think partnerships is all about helping each other, right? They will be the first baton of 4 times 100. I will take the second baton and the third batons. And the last one is really up to the co-founder to really close it for all of us. But that's marriage. Yeah. So that's life. I think it's a matter of not only that we are mentoring the co-founders, but many times even VCs, senior VCs as us, we also get mentored, right? And get also insights, business insights from co-founders who are running on the grounds, who are pumping the grounds, who are facing the problems, and they feedback all this over to us. Yeah. And together as a team, we'll try to solve the problem together.
Yeah. Okay. And Kuo-Yi, what's your take on this? Because you've already mentioned that local is important as well. Of course, with COVID-19, this may have changed a little bit. So I mean, you strike to me to be a person who can easily deal with people, meeting face to face, go into relationships. So how's your view on this, and has this changed now with COVID-19?
Not a whole lot. I think, at a high level, so Monksville Ventures, first of all, it's a partnership of ex-entrepreneurs, founders, operators, ourselves. And our value proposition to founders is that we're here to be your thought partners. But to David's point earlier, we are ultimately, one of the things that we try to do a lot of is to connect the dots. We try to help founders kind of like connect the dots from here to there, to make sense of what's in front of them, to lay things out in terms of what are the options and how should they think about which option to take and the pros and the cons and all that stuff. So I think a lot of what we do is try to provide that thought partnership to founders. We have the good fortune to be in companies that we founded from zero to IPO. So that also provides the sort of that wide spectrum of issues that a founder might encounter over the life cycle of the company. The other dots that we try to connect is really across our network. We also have the great fortune of working with David, for example, at MindWorks across a couple of co-investments. So, hey, all doing well. So that is the other dot that we try to connect, right? Guys that we enjoy working with, that we think can really add value to the entire portfolio. And so that's kind of the dots that we try to connect for people. Yeah. And I think that's one of the superpowers that we try to kind of exert in our portfolio.
Yeah. So it's clear that the relationship VC companies is a collaborative one. You have to be willing to collaborate and actively participate as well. And Edward, you already mentioned it's important that you can get also information from them, like, for example, the co-founder that you referred to. So I would like to ask all of you, from that point of view, how can founders help you guys, the VCs? So how do you envision this? Because it's a reciprocal relationship. So if you could give a tip to the founders out there, hey, when you want to deal and work with us, with the VCs, this is what we would like to see from you. So Edward, what would be the thing you would like to ask or tell founders from that point of view?
VCs and founders is very much a love-hate relationship, right? On one hand, VCs, we hope that the co-founders doesn't sleep 24/7, right? They keep winning the deals. But realistically, for the co-founders to really grow, they will really have to spend time to pay back to the communities, to really volunteers, and to really share their knowledge, to be a business leader locally. And that really would help the VCs that will really help the co-founder in the growth. So actually, for us as VCs, I think we are actually, I'm very much inspired by those co-founders who really bother to take time out of their busy schedules to really care for the underprivileged, or to really do things outside of their normal comfort zone itself. Okay. Because it reflects their coachability, it reflects their ability to forge important relationship outside of the existing relationship. It actually excites us because we see these co-founders as possible co-founders who are creative, possible business leader in their own right in future, and we are more likely or not to be investing in them when they were to do their next startup in future.
Okay. Kuo-Yi, what would you like to tell founders out there how they can help you?
I think it's an equal relationship. As much as you think it's asymmetric, like we have the power and the money, I do really think it's a partnership. So be open. To Queenie's point, good news, bad news, plus, minus. It's really about being open book. And I think the true partnership is when we work with folks in the good times and the bad times. And so that's what I would say to founders. You treat us as folks that you can be open with, and we're here to help.
Okay, thank you. Queenie, what would you like to tell founders?
Yeah, I think it would be the same, right? Open communications is important. And I think it's not just when the company becomes our portfolio. I think it's also during the time when we first have conversations. I mean, sometimes founders would like to focus a lot on the growth prospect of the business, what is the total addressable market of the business, etc. But I think one big important component that we look for is also how this founder would react when he or she face the challenges. What is the sort of worst case scenario that they're expecting, and how are they going to react to it? What is the sort of playbook that they have in their mind? And I think this is equally important as the growth opportunities of the business.
And David, what would be your message to the founders?
Yeah, all the panelists has great points. I'm not going to repeat that. I think following what Queenie said, I think every founder, every VC talks about the same thing: large market size, scalability, defensibility. But I think the most underrated term, or the term that's never discussed among founders and VCs, is agility, and it's very different than adaptability, which is, you're adapting to the environment. Agility is your ability to adapt your business to new environments, attacking new verticals. The most successful tech companies in the world has never begun with what they wanted to do. Obviously, Better.com, Sean's company, started out as something else. Other companies as well. So I think, to Queenie's point, when we talk about agility, let's brainstorm what if your idea fails. What is the plan B? What is the plan C? Because we know that this is an early stage investment. We are at an early stage, and be cautious and be on your foot to have high agility to new environments. That's my view.
Okay, thank you. So we're at the end of our panel. We've had 45 minutes. If I would summarize everything you've said in terms of what is that VCs are looking for, what should founders do, what should companies strive for, what would be the perfect pitch, I think it would really be walk the talk. Founders, walk the talk. You appreciate that. That's what you're looking for. You want to be, because it will help you to be agile as well, like you said, David. So I think that was an important last point. So I want to thank all of you, Edward and Kuo-Yi here in Singapore, Queenie and David in Hong Kong. Thank you for your participation, your pearls of wisdom, and thank you for everyone listening to it and your questions. Bye-bye.
Thank you.
A round of applause to the final panel discussion.